Hey everyone, welcome back to Corporate Decoder, the place where we decode the financial jargon to find the real story behind the numbers. And today we've got Nabors Industries Limited letting us know how they've been doing in the last quarter. And let me tell you, this report is packed with news that might have investors raising an eyebrow or two. Before we dive in, if you are all about getting clear, no-nonsense insights from official company reports, make sure you are subscribed. And hey, we've got a fantastic community over on Discord, linked in the description below, where we break down these filings even further. So Nabors Industries, a company that is deeply involved in, well, the oil and gas drilling services, has just put out a report detailing their financial performance. Now, usually these reports are filled with a lot of technical stuff, but we're going to cut through all that and get to what really matters. They are giving us a peek into their results for the 3 months that ended the 30th of September 2025. Think of it as a quarterly checkup for the company's financial health. Now, let's look at how their stock is doing. Nabors Industries common shares trade on the New York Stock Exchange under the symbol NBR. This is important because it tells us where most investors are watching and trading their stock. This report is a Form 8K, which is typically used for significant events that shareholders should know about between the bigger. More comprehensive reports like a 10Q or 10K. The main event here is the announcement of their financial results. Okay, so item 2.02 is where we get down to business talking about their actual results and financial situation. Nabors announced the 30th of September quarter results on the 28th of October 2025. They also mentioned a conference call happening the next day, the 29th of October, to discuss these results. This is pretty standard practice for public companies. They usually have a call where management talks through the numbers and answers questions from analysts and investors. They also made it clear that the information in this part of the filing, along with any exhibits, should not be considered filed for certain legal purposes. This is a common disclaimer, meaning they are providing the information, but not necessarily taking on full legal liability for it in the same way they would for a registered security offering. And what is key here is that they've attached their press release as Exhibit 99.1. This press release is likely where you'll find the highlights they want to share with the public. It is often a more digestible version of the financial story compared to the full SEC filing. Think of it as the executive summary, but we'll dig a little deeper. We also see an investor information exhibit, which could be a presentation or more detailed data that supports the press release. Now, something that is becoming increasingly important in these filings is the inline XBR data. This is essentially a way to make the financial data in the report machine readable. It helps analysts and regulators more easily pull and compare financial information across different companies and different reporting periods. It is like giving the numbers a universal language. While this filing doesn't contain extensive financial tables directly within the main text, the press release it references as Exhibit 99.1 would contain those crucial numbers. Typically, these reports focus on revenue, earnings per S-hair, operating income, and various segment performances for Nabors. Their business is heavily influenced by the demand for oil and gas, so we'd be looking for how many rigs they had active, their utilization rates, and how their different service lines are performing, like offshore and onshore drilling. For example, we'd want to know if their revenue has gone up or down compared to the same quarter last year. If revenue is down, does that mean they're drilling fewer wells, or are contracts for their services becoming cheaper? And what about their costs? Are their expenses growing faster than their income, which would squeeze their profits? We'd also be scrutinizing their debt levels, companies in capital. Intensive industries like oilfield services often carry significant debt. We'd want to see if they're managing that debt effectively and if their cash flow is sufficient to cover interest payments and principal repayments. A company that is struggling to service its debt faces serious risks, potentially even bankruptcy. Think of it this way. If their revenue is down by 10%, it means they are bringing in $1 less for every $10 they used to. If their costs are up by 5%, it means for every $100 they spent, they are now spending $5 more. This difference is crucial for understanding their profitability. We'd compare these trends to industry averages. Are other drilling companies facing similar headwinds, or is Nabors underperforming its peers? This context is vital for a true understanding of their financial health. The signature block here tells us that this report is being signed off by Mark D. Andrews, who holds the title of Vice President and Corporate Secretary. This is a standard part of any filing, indicating who is officially responsible for its accuracy. Now, looking at this filing more broadly, it is interesting that the core financial details are in the reference press release. This tells us Nabors is using the standard channels to communicate their performance. As an investor, you'd be keen to see what that press release says. Are they trumpeting strong earnings, or are they explaining away a difficult quarter? For Nabors Industries, a company in the cyclical oil and gas sector, their performance is heavily tied to energy prices and exploration activity. If oil prices are high, demand for their drilling services typically increases, leading to higher utilization rates for their rigs and better contract terms. Conversely, low energy prices can lead to reduced drilling activity, forcing companies like Nabors to idle rigs and cut costs. We'd also be keeping an eye on any mentions of their fleet. Are they investing in new, more efficient rigs, or are they facing challenges with aging equipment? Their strategy for modernizing their fleet and adapting to potential shifts towards renewable energy sources, or at least providing services for the transition, would be a key factor in their long-term prospects. It's also important to consider the competitive landscape. They operate in a space with several large players, so market share and pricing power are critical. In my opinion, while this filing itself is more of a notification about results, the real story lies in the press release and the subsequent conference call. We need to see the actual numbers to assess the company's direction. Are they showing signs of growth and profitability, or are they still battling the volatility of the energy market? The strength for a company like Nabors often lie in their operational expertise and the demand for energy itself. However, weaknesses can emerge from fluctuating commodity prices and significant capital expenditures required to maintain and upgrade their massive fleet of drilling rigs. One major risk for them, as with any company in this sector, is a significant downturn in drilling activity due to sustained low oil and gas prices or regulatory changes impacting fossil fuel production. On the flip side, a sustained increase in energy demand and prices could present a significant opportunity. So, that is our initial decode of this report from Nabors Industries Limited. What are your thoughts on their latest performance update and what it might mean for the company's future? Let us know in the comments below. If you found this breakdown helpful, please give this video a like and subscribe for more regular insights into the corporate world. And don't forget to join our Discord community, the link is in the description, for more in-depth discussions. Thanks for watching, and we'll see you in the next decode.